Pinduoduo just reported their latest earnings report. The stock is up currently at the time of making this video about 13%. Double beat on the top and bottom line. But before we jump into the report, I do want to touch on a report that came out, I think yesterday or 2 days ago, with regards to Temu. Of course, with everything that's going on with the TikTok ban, no ban, divestiture, whatever, of course, an app that is Temu, that is owned by Pinduoduo, is obviously under scrutiny as well, or at least linked to that potential ban. So there was a report that came out that said that the US accounted for 60% of total merchandise sales for Temu, and that they're now intending to reduce this share to as low as 30% by 2025. The shopping platform is boosting its presence in regions including Europe, Middle East, Japan, and South Korea, and has informed its merchants to prioritize stocking up on products which are popular in those regions. By the way, for those that have been following Pinduoduo or have watched my videos on Pinduoduo, you know that I'm not that happy when I cannot find numbers with regards to Temu. And like they say here, Pinduoduo has never disclosed financial details about Temu. However, analysts estimate that it is a money-losing business. And you might have guessed it, in this press release, we are not getting any numbers with regards to Temu. Now, currently, as you can see here, one share will cost you $144.75. Stock is up 13.37% at the time of making this video, which means its market cap is going to go back up closer to the highs we've seen not so long ago, so about $180, $190 billion, of course, depending on the open. Pre-market, there's way less volume. But when you look at the multiples, when you look at valuations, for a company that is growing this fast, top and bottom lines, paying 19.6 times for PE, EV to sales in the next 12 months of 3.3 times, not that expensive, especially if you look at what the analysts are expecting here for the coming fiscal years. On average, close to 30% growth year over year, top and bottom lines. And if we look at the current average analyst price target, there are 43 analysts covering this stock with 33 analysts with a buy rating. Currently, they have an average price target of $174. Of course, I expect those to change throughout the coming days. Now, I know already some of you will comment, yeah, but this is a Chinese company. We don't know if the numbers are 100% correct. We don't know how they reach those numbers. We don't even know how Temu works. Is it going to get banned? Is it not going to get banned, divested, etc., etc.? I agree. These are all points to be taken into consideration, and the same could be said with any other company such as Alibaba. By the way, the fact that Alibaba is not growing as fast anymore is probably due to the increased competition by the likes of Pinduoduo. We've talked about that last year as well. Pinduoduo continues to grow extremely fast, while Alibaba struggles to grow double digits. Of course, two different companies a little bit, but still. I mean, Alibaba, we've seen the cloud business for that company is not really growing that fast. And like I said previously, it's not that people don't want or people do not buy Chinese stocks these days because, well, the Chinese stocks don't go up or just go down. It might be true for a couple of companies, but we've seen Pinduoduo's performance over the last year, an outperformance of the market. So there are clearly some companies that the market or that investors are willing to buy. Now, again, it's up to you whether or not you want to have that added risk to your portfolio. Now, before going into that report, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, we'll really appreciate that. Want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so let's start off with a couple of highlights here and then a couple of comments from the CEO. So total revenue reached $12.51 billion for the quarter, an increase of 123% year over year. Operating profit has increased 146% year over year to $3.15 billion, and non-GAAP operating profits reached $3.46 billion, an increase of 112%. As for net income attributable to ordinary shareholders, that came in at 3.27%, also an increase of 146% year over year. Then with regards to a couple of comments here from the CEO, 2023 represents a pivotal chapter in our corporate history as we transition towards high quality development. In 2024, we remain dedicated to further improving consumer experiences, enhancing technology innovation, and generating positive impacts on our communities. We will continue our high-quality development strategy, stay dedicated to offer great value and exceptional service, and keep building thriving communities that can benefit all. By the way, Pinduoduo is a so-called agriculture company. In 2023, our R&D investment exceeded 10 billion renminbis for the second consecutive year, underscoring our dedication to technology and agriculture advancements. Our focus remains on creating lasting value through strategic initiatives with sustainable and positive impacts. Now, it's great to see such a huge increase in revenue and operating profit, stuff like that. But then, if you look at the total cost of revenue and total operating expenses, you might raise an orange flag, because total cost of revenues increased 293% year over year. This was mainly due to increased fulfillment fees, payment processing fees, maintenance costs, and call center expenses. Then if you look at total operating expenses, that increased 44% year over year, primarily due to an increase in sales and marketing expenses. So yes, while you see revenue increase here by 123%, the total cost of revenue increased close to 300%. It's also true that total revenue and total operating profit and net income increased faster than total operating expenses, but still you're seeing these huge increases here. So far it is working out. Let's see if the same can be said when growth decelerates. Now currently they do have quite a lot of cash and cash equivalents and short-term investments. That number is now at $30.6 billion. As for the full year 2023, total revenue increased 90% year over year, and the mix here is revenues from online marketing services and others, and revenue from transaction services. So for the first one here, that came in at $21.62 billion, representing an increase of 49%. The second one increased way faster, up 241% year over year to $13.25 billion. And so last thing here, looking at the graph right now, you can see that we're going to go back to a previous stop close to $150 that we've seen back in late 2023. In recent weeks, we could see that the stock has rebounded around that 200-day moving average, which now sits at $113. If we look at the daily, we could even see that back then, when it went under the 200-day moving average at around $110, the stock was oversold. So for those of you that have been looking at it, hopefully you took out a nice position here at the so-called short-term bottom. So overall, to conclude, another great year, good quarter for Pinduoduo. That said, it comes at a cost of it, one, being a Chinese company, having now the whole TikTok thing happening could impact other Chinese companies as well. Of course, that will definitely impact their stock whenever that decision gets made, whether it's divested or whether it's completely banned, remains to be seen. So overall, that's about it. Of course, do share your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye bye.